Good evening and welcome to the Rick McCormick Show. I am your host, Rick McCormick. We're in our 6th season, unbelievable, as hosting a real estate show and being I'm the resident expert on real estate in this market here in Oklahoma City and nationally. And we'll offer you some of the publications that we have written about buying homes, about selling homes as the show goes on. Also, I'll have some, for realtors, some fundamental realtor fundamentals and tips. I'm going to have a couple of great guests on, as always. I mean, we have a great time here. The number's there. If you're not listening on Artist First, you can reach us at 405-310-7470. Even if you're listening a week, the show is available on Apple Music, Amazon Music, Spotify, and our YouTube channel, as well as Artist First Radio Network. And we've got a media team that puts it out there. Reach out. Love to hear from our listeners. We get things all the time. Recently had from a gentleman in Atlanta was asking about FHA loan requirements, and we talk about it all here. We talk about real estate. We talk about the various types of finance. What's the best loan product for you? Is that a conventional loan? Is that a VA loan? If you're a veteran, is that an FHA loan? Is that a USDA zero down rural development property? We have private lenders and things that would hard money in certain situations. We have situations where, we've got people that will, if things are kind of been through some bumps in the road there with your finances and credit, I got people that will buy a home for you and put it in your name until you get your credit squared away, and then we roll it over, hopefully within 6 months, and put it in your name. We've got every kind of product. I've got down payment assistance products. I've got different products that some down payment assistance that I can get you that you will pay all your down payment that you do not have to pay back. I've got other programs depending on your credit profile and credit score, and to where it'll pay your down payment. It'll hold it over here kind of in purgatory, I call it. You don't pay it back. You don't pay interest on it. Now, if you ever sell your house, it's still over there, sitting there. But we've got that. And we've got all kinds of loan products and things to help you. And so it's all an educational process. Buying a home is about location. It's about meeting the needs of you and your family. But it's also, for many people, as much as 85% of the entire equation is about the finances of it. So we're going to talk about what's going on here with the interest rates and that thing. 7 days ago, last Wednesday, the Federal Reserve dropped us 25 basis points. That's the second time that's been done. We anticipate we're going to have one more drop like that this calendar year. We're going to have our mortgage expert, Kendall Dexter, on later on, and we're going to talk about how all that, went down, what actually has happened, what it's done. Is it taking the bond yield rates up or down? What is it? What's it done? And like I said, because people, as soon as they hear that, expect, of course, for rates to go down. And typically they do. But I think we may find out tonight that maybe unless something's changed in the last few hours, that perhaps they did not go down, that they stayed, where they're at, or perhaps even went up. And assuming they did, how can that happen? How does that happen? Anyway, I'm Rick McCormick, the host of the show. You're listening to Rick McCormick Show in our 6th season here on Artist First Radio Network. All right, we talk about, as we dive into the market here, and remember, you can reach us, once again, 405-310-7470. And also there's an email there on the home site page as well. There's numerous emails you can get us at. MetroOKCProperties@gmail is one that we use. There's Rick M at GrantCardoneTeam.com. And to that point, like I said, offer a special coaching program for realtors. If you're listening and you're interested in discussing becoming a part of our program, which will guaranteed to up your income. If you're interested in me speaking and want to book me as a speaker at your next event, we've got some positive results, and some people find our speaking very worthwhile. And I will tell you that, like I said, when I speak, there's a couple of goals. Number one is to just reach the audience that's there, whoever that might be, whatever demographic, whatever age group, whatever business profession that they're in. But beyond that, it's inspirational, number one. But inspiration fades very quickly. You go to a conference and you hear someone speak and you're inspired, and that's great for a week, 2 weeks. But ultimately, we want to go beyond inspiration, and we want to reach transformation. And I teach and speak to you a little bit about not only being inspired, but about transforming your mindset and transforming your business. And we hope to be the difference in our coaching program and our speaking program, and helping you make it versus not make it. 67%, two-thirds of businesses fail within the first 3 years. And if you push that thing out to a 10-year mark, there's only about 3% of businesses that survive beyond a 10-year mark. And real estate, the numbers are way more staggering. 75% of licensed realtors quit during their first year. 75% are gone during their first year. And if you push it out to 5 years, the failure rate goes to 90%. So we are committed to lowering that failure rate. We're committed to lowering your business, the business failure rate as well. We want to help you survive and make it. All right, let's talk about our market here with what's kind of been happening, in Oklahoma City. I want to tell you what's happened in the last 7 days, and then I'm going to come back here and talk a little bit about what has happened kind of from year to year, looking at recent months, year to date, and so on. But let's start off here with what's going on right here. All right, in the last 7 days, last 5 business days, what all has went down? Well, let's start out. If somebody tries to tell you, well, there's nothing happening in real estate, it's winter, it's November, no, there's nothing happening. There's only been 570 closings, okay? That is just under 120 in 5 business days. That's just under 120 a day, okay? So now what about new listings? We've had 666 new listings hit the market. We've had 148 that came back on the market. So that takes us to about 800 properties since we were last here in the last week. 570 closed, sold. I had 2 of those on Friday myself. I had a wonderful couple, Sean and Liz Everett, that up in Guthrie. They had a wonderful home, wonderful property up there that we put them in when it was brand new. They have moved on with life. They're down in the Dallas-Fort Worth Metroplex right now, living out there in the area up there north of Fort Worth in Keller, Texas, but closed their sale on Friday, and got a new couple out there moving out to Guthrie, and they're moving home. And then had another closing over in southwest Oklahoma City. So had 2 of those on Friday. We're helping people every day buy and or sell properties. We're helping realtors through our coaching program put their program together and enhance their situation and increase their revenue. So whether you're a realtor, whether you're a buyer, whether you're a seller, let us get a hold. Let us help you. We didn't write these books. We don't have these radio shows, and that by accident. We are experts in the area, in this market, in this area. 570 sold, 666 new listing, 140 back on the market. Now, I've had 878 price increases. That's right at 10%. What is my inventory? Since we were last here, our inventory has hit that 9,000 mark. 9,000 properties for sale at one time in our market. Unprecedented numbers, and about 50% over what is our normal here. Tonight, as we speak, I'm at 8,777 properties right now, this very moment, at 6:14 p.m. on Wednesday evening for sale. That's condos, that's townhouses, that's anywhere that a single family could live. Anywhere. 87, 77. And they range in price. Anywhere from, I've got some things on there that are $50,000 and $60,000. Now, please don't ask me if they're move-in ready. They're in great locations, whatever. But, and I've got them from there all the way up to $5 million. So we've got a lot of variance in our marketplace. And, you know, whatever you might be looking for, if that's an investment property, whatever it is, you know, good chance that we got it. That we've got it. All over Oklahoma City area, all over the thing within 100 miles of here. We got properties. We got properties. Like I said, got things in $40,000, $50,000. We got things at $3 million plus, $5 million. So, and all points in between. Just under 8,800 tonight as we speak. Why is that important? Because it dictates whether it's a seller's market or buyer's market, and we are clearly in a buyer's market now. Now, can I list your house? Can I sell your house? Yes, I can. But you need to be patient. It may take time. And it's more important than ever that you have a real professional and a real pro doing this. Great presentation, great media team, photos, drones, written marketing, advertising. You've got to put it all together. Got to, more so than ever. The realtor that comes out and writes 3 lines about your home and puts pictures on the phone doesn't get it. Doesn't get it in this level of inventory. We are, like I said, at unprecedented times with inventory. So be smart about who, what, and where. Now, as we head into these final 7 and 8 weeks of 2025, which I think it's crazy to say that. We're deep in college football season. Oklahoma City Thunder, by the way, we're deep in NBA season. We're just kicking off college basketball. There's one undefeated team in the NBA, in the National Basketball Association. And that would be your world champion, Oklahoma City Thunder, at 8-0. Currently in a back-to-back, they're going to take on the Portland Trail Blazers at 9 o'clock our time tonight, out in Portland, as they just defeated the Clippers last night in Los Angeles, back-to-back. So we're rolling there. We're already in winter. Time change. Unbelievable that the way 2025 is gone. But, again, don't let anybody tell you. There can be some very serious home shoppers out there right now. The spring and the summer, yeah, those people that like to drive around and for entertainment go to open houses. But these are more serious shoppers right now. Still things moving. How many sold? 570 in the last week. Now, we're going to find that interest rates dropped last Wednesday, Federal Reserve. We think they're going to drop again in 5 more weeks in December. But right now, let's bring on our mortgage expert, the owner at Security Financial Mortgage in Edmond, Oklahoma, right here locally, our man who's with us weekly or every show here, Mr. Kendall Dexter. Kendall, I guess our interest rates after this drop are probably about 4% right now, huh?
That's what everybody thinks, Coach. Great. First of all, great to be back on the show. My week has been filled with educational calls about why rates are worse after a rate decrease. And part of it is that they're not directly tied. You know, we do expect that when the Fed lowers the Fed funds rate, that the cost of borrowing money will decrease. But it's more based on the 10-year, directly tied to the 10-year bond yield. So they're not exactly directly correlated, but they usually follow each other very closely. So since the announcement of the quarter decrease, we have lost 57 basis points in the market. So all rates are 55. So if you borrow $100,000, any given rate is costing $570 more now than it was before they decreased the rates. So
oh my,
people are having a hard time understanding that. All they see is on the news, rates are down. But they're not down. They're worse. So it's a crazy time.
Okay, now you kind of alluded to that, but I mean, in theory, they dropped them in September, and they dropped them last Wednesday, which was, I think, October the 29th. So that's 50 basis points. Have we seen, in the two of those combined collectively, have we seen any gain?
No.
50 basis points should be somewhat significant, shouldn't it?
Yeah, you would think. But here's Powell's genius to keep the markets on its heels. And if you listen to our previous shows, we've been saying this a lot. Powell is doing a tremendous job at hitting his goal of getting the rate down for the banks, but keeping the market on its heels for the future, and it causes us to get no benefit from these decreases, and it's maddening. So, I mean, he'll talk out of one side of his mouth and say we're going down a quarter, and then he'll say, but I don't know going forward if we're going to continue this. And that's got the market on edge. To me, that is the sole reason why we're not seeing the benefit that we should, and there's just no value for the consumer if we don't get the lower rates. Like, you decrease the borrowing rate for the banks so that consumers can borrow at a lower price, and we're just not seeing that.
Yeah, and would I be safe in saying, Kendall, that seeing these rates come down, I mean, and again, they didn't just knock the bottom out of it, but 25 basis points twice, 50 basis points, and the rate not changing at all, is that highly unusual, or is it not?
Yeah, tremendously unusual. And as they continue these quarter drops, if they continue along the path, we're going to see this benefit. But right now, they're not sure. The market's not sure if he's going to continue. So that is the reason for the rates staying where they are. You know, before the 50 basis points, we were selling in the mid sixes on conventional 30-year fixed. We were selling in the low sixes on government loans, 30-year fixed. And now we're selling in the mid sixes, 30-year fixed. You know what I mean? Like, nothing has changed really. So I think personally it's going to take that December decrease and some positivity about decreases going forward in order to really see the value that we're looking for.
If he had announced, he being Jerome Powell, and have a press conference at the conclusion of their meetings, if he announced the rate cut and did not say anything and did not put a somewhat negative spin on it, would that have made the difference? I mean, is it all about projection and speculation?
Yeah, in my estimation, yes. The market moves ahead of these moves. They knew that the quarter was coming. They wanted to hear what he had to say next, and that is, by all accounts, more important than the actual cut itself. We need to hear something that is positive for the market. We need to see something that surprises the market, like instead of a quarter, they come out with a 50. Something like that to really get some headway towards the better rates that we're looking for. And if he continues to drop them by a quarter and then speculate that they might go up or stay the same going forward, we're not going to get the benefit that we need. What we really need is a new man in charge.
We think in May that's probably going to happen, because I think his term is up, and if he doesn't endear himself a little more to our current president, I think we're going to see a new man in charge. Would you?
I'd say that the chances of that are close to 100%.
Yeah, I would. I think you're right. So, with all that said, it's like if you're listening. Well, I think it's a real estate show. I want to hear all. Well, we're talking about, because so much of this, guys and listeners, is related to where are we slanted? Are we in the buyer? Is it good for sellers right now? Is it good for buyers? It's good for buyers in terms of inventory and in terms of getting you closing costs, getting you a great deal. It's a great time. However, with that said, if these interest rates come down, I mean, I always say about 85% of this entire equation comes back to a guy like Kendall Dexter here. I mean, can the people get qualified? What can they qualify for? If they want this type of home that's going to be $400,000, can they get and afford that type of home? And, and that's kind of what we've seen. We got spoiled a little bit, Kendall. When I speak to groups and that, recently was on stage and I told someone, you're going to be surprised when I tell you that interest rates are lower today than they were in 1971. Oh, you hear a little buzz. Is that true? Yeah, it's 100% true. And let me tell you about the year of 1984, when interest rates for the year were 14.2%. And many people that did not live through that period that are younger, or many realtors, do not study this and do not know this. And so when people come up and talk about how high interest rates are, well, they're higher than they were at the historic lows. They're clearly higher. But that was a period of time. How long have you been in the mortgage industry, Tim? 20-some-odd years, 27 years?
28 years this month.
28 years. The period that we had, where they were in the COVID period, what kind of rates did we have, and how long did we have them? What did we have, 2.75 to 3.25? I mean, what was kind of our range on rates, and how long did that go? 3 years? I mean, what did we have those?
We're talking low threes to all the way down to 1.99 between 2020 and the middle of 2022, I'd say. So really 2 solid years. And then they started creeping up, and by January of 23, we're doing conventional loans at 5.625. So the creep up started, middle to fall of 22, 2 solid years. But beyond that, there was a lot of 4.25 going on, but pre-COVID and stuff like this. So meanwhile, when I was in the business in the year 2000, if you were buying a house and you got an 8.375, you were doing it fantastic, which is a much better comparison than the 70s because, the economy's totally different. You could also buy a house for $30,000. That was pretty nice back then. The buyers care about, can I make my payments? Is it financially feasible? And what these rates are doing is twofold. Number one, it's not affordable by first-time home buyers' expectations and really their budget overall. Number two, the people that aren't too concerned about that, they already own a house and they're sitting on a 3% note, a lot of them. So this is what's driving this buyer's market, is just because it's kind of stale. It's a stale market. People want to move their house, and if you want to buy it, you're in a position of power. That is not going to last. We've been saying this. It's lasted longer than I thought. But if you want to take advantage of this buyer's market, do it now, because when these rates do finally actually come down and we see some movement, a lot of people are going to come out of the woodwork. A lot of people.
You're absolutely right. And to the point, it's like when people talk about the interest rates, and I mean, when we look at this, it was really just about a 3-year period. And it was a 3-year period where they were at historic lows. It's not like, some younger people think they've always had somebody said, are interest rates? I had a young guy, and I've done 2 transactions for him. I've helped him buy 2 different houses. Is their interest rates higher now than like they've ever been? I said, no, they're actually pretty low. He said, I thought they're like really high. And I said, well, in relation to what? In relation to this, and I went through this with him, and I wanted you to tell our listeners, we had about a 3-year period where they were in historic lows, unlike they've ever been, and probably in a period that we're never going to return to again. And so if you compare, like where we're at now to that period, yes, they're high. And I understand, like I said, and of course, houses went up because of the competition and how many buyers were out there. The price of homes in our market went up a great deal as well. So we're in a different time, but big picture, interest rates I know you locked somebody for 6 and an 8, 6.125 this week. And I know that's a really good rate in compared to a lot of your competition out there, but in the big picture, that's really a pretty good rate for right now and a pretty good rate over the last, like you said, 20, 25 years. I bought a home in 1990. I was a small child, of course, but what was that, 35 years ago? And I got an unbelievable interest rate that everybody was excited about. How'd you do it? It was 8.8. It was a great rate at that time. We were coming off the 80s when everything had been double figures for the entire decade. And in some cases, high double figures. So it all depends on looking at the global perspective of where we're at. But it certainly would help a lot of people and would help spur the housing industry if they come down. And if Jerome Powell, like I said, would not drop immediately say, we're dropping them, but how about just we're dropping them? Make a lot of difference. But anyway, we'll continue on this thought when we come back, and we're going to get some other things. We're going to be joined by another guest here, and when we come back, you're listening to the Rick McCormick Show. Stay tuned.
Hey, it's Coach Mac. If these chats are inspiring you to level up your real estate game, tap follow or subscribe right now so you never miss the next one. You'll get a notification as soon as new episodes drop. Easy as that. Let's jump back into the show.
Welcome back to the show. Glad you're with us here for the second half of the hour. I'm Rick McCormick, joined by Kendall Dexter, and now joined by the owner at Premier Insurance and local investor, Brad Martin. Brad, got some new thing. You've got a lot of carriers over there at Premier Insurance to run it through. My insurance is coming due. Hit my anniversary there. I think we're staying the same on homeowners, and I know they were checking on the auto insurance, but you guys have got a couple of new people you've welcomed to the party over there.
Yeah, it's always trying to grow a Premier Insurance, always looking for the best deal for our clients. Coach, you're a prime example. Our team shops your insurance for you every year. Most people do not. Most people are reactionary, waiting on the client to call to say, hey, my insurance went up. Can you shop it for me? Give me a better deal. We do that proactively, not reactively. But we're also happy to announce that we got a new carrier today, one that's a pretty big household name that a lot of people know, AAA. And so they've come into the market for us. We've been able to place some clients with them. So it's just adding another tool in our box for our clients to where we can place them with another great reputable company that helps them not only protect their family, protect their assets, but also save them some money.
Well, the more the merrier. You guys have got, 55 to 60 different carriers, and when you can, I know that a guy like Kendall will get on the phone and probably make 42 phone calls and want to shop them all himself. But, man, when you got somebody that can do that for you, you can just take your information and run it through all the different carriers and see, where you're at and who's got the best rate and continue to add people. That's a good thing. And I know we were talking, off the air about you guys have got some companies there competing back and forth. I guess you got Safeco said we want to be a bigger player in the market, and they're trying to take some people out. And competition can be a good thing. You're seeing rates have really been climbing the last couple of years. You said you're starting to see maybe a little bit of reduction in some rates.
Yeah, that's exactly right. Safeco, who's owned by Liberty Mutual, that's a large insurance carrier out there. They've been very aggressive in the past. They started to kind of wane off a little bit as far as wanting to really be a dominant player in the market space, and so they kind of calmed down on some of their pricing models. But over the past 2 to 3 weeks, they have really come back to us as the largest Safeco provider in the state of Oklahoma, I might add. We write more Safeco business than any other insurance company out there by a factor of about 2.5 to 1. They came to us and said, we want to be a player again in the Oklahoma market. We're looking at doing some things to be very aggressive in this, which only benefits the customer. At the end of the day, it only benefits the customer because when you have a multi-billion-dollar company like Safeco that says, we want to get aggressive, it's like Walmart. When Walmart says we're slashing prices, come buy us, Black Friday sales, we move into Thanksgiving. That's what Safeco is doing, where they're saying it's a Black Friday sale. We're going to try to be aggressive in the marketplace. So we're really excited about what's going on in the insurance industry, which has honestly been tough to say over the past 12 months, but we're starting to see a little turnaround, which makes us very excited with what's happening right now.
Well, great. That's all good stuff. And I know to the point here in with what we try to do with myself and anyone associated with me with the Rick McCormick Realty Group is we want to be a one-stop shop. We can help you with the real estate. We can help you shop. I help you find the house that you're looking for. I can go and set it up and show you different houses. I can negotiate and get you under contract for that dream house. Then once we do, we're going to take you through home inspections. We're going to take you through appraisal. We're going to get you with insurance carriers to try to get you the best rate, just like we're talking about right now. We're going to get you with mortgage people like Security Financial and try to let them put together the package. We're going to probably get you with Security Financial before we even shop for the house to make sure what we can afford and whatever. But that's something, having partners that can really come through and deliver. I've had people ask me, like, why do you guys do all that? Why are you? Well, my response is this. No one yet has ever really gotten mad or upset with us for saving them money. And I don't know that anybody will. Now, again, hey, I love my insurance carrier, and, my insurance carrier is my brother-in-law. I mean, okay, hey, that's fine. I mean, go ahead and do that. Our objective is just to try to present you with options that are going to make you happy, save you money. At the end of the day, I want to try to put you with the same people that my business is with, which my mortgage is with Security Financial Mortgage. My insurance is with Premier Insurance. My family members also have the same thing. Mortgages through Kendall Dexter and insurance through Brad Martin. And
Coach,
got a homeowner,
here's the thing.
Go right ahead,
There's a common goal here. If you get the right real estate agent, that's going to save you $10,000 off the price, maybe you got a good negotiator. And then Brad's able to save you $100 a month off of insurance compared to what your brother-in-law can get. And I'm able to get you a half a point better on the rate potentially or whatever. And at the end of the day, it culminates to maybe paying $250 less a month or something, between the three components. And you owe less on your house. Maybe you've got more money in your pocket because you were able to negotiate closing costs or whatever the case. So having all these components coming together is just tremendous for the consumer.
Well, absolutely. And that's why we, all of us, I guess it kind of starts with the real estate agent and the broker, which is me. But I mean, all you guys and all of us are very important to the, I had a guy tell me the other day, he said, well, I couldn't imagine being an insurance guy. You just live your life just trying to make money. I said, no, that's very short-sighted. You're helping people with their homes and their automobiles, and you're offering people with a product that they need and have to have. And you can be very passionate about that. And, whatever, this was like I said, a lifelong school teacher, like he had made all this impact. Well, your position through life was not unimportant, but that doesn't mean someone in business is not important. And to the point here, the largest purchase that most people make in their life is their home. I'm helping them secure that. Kendall's helping them with the financing of it, and Brad's helping them with the sleep at night and protect their investment, through homeowners insurance. So, yeah, very important components. Brad, let's talk a little bit about the economy, and I want to get to my realtor fundamentals here in a bit and talk a little bit about mindset. But these still a lot of pretty aggressive investors out there that I'm seeing right now, and I think a lot of people are anticipating a good year in 2026 based on these interest rates. We're hoping that drop, and just like I said, overall positive economy. During our previous administration, President, at one point the inflation was 9.5%, and inflation now is lower than it's been in some time. And I guess it depends on who you ask and different readers in this, but all in all, the stock market's higher than it's ever been, ever. And so we've got some pretty good indicators of a positive economy. how is that translating into kind of the investment world as you see it, Brad?
Yeah, a lot of people are still placing capital. Rates are starting to come down, obviously not only on the home side, but also on the commercial side. So you're seeing, a ton of people starting to look at refinancing, look at placing capital, and that only boosts consumer confidence, that only boosts investment. So you're definitely starting to see more and more people pull money off of the sidelines into some assets that are revenue producing. And, to me, that is a great sign that at least the smart money feels there's a buy opportunity. They're starting to take advantage of that. And even as you go into the end of the year, I mean, if you look at the big, bold, beautiful bill that Trump and Congress passed a couple of months ago, there's some things like bonus depreciation, accelerated depreciation on commercial assets. So you have people that are trying to write off a lot of income. They're utilizing some of those tax advantages, which means they got to place that money. They got to place it by the end of the year. Coincide that with lower interest rates. It is a buy time right now. People are definitely buying and moving forward with a lot of different assets. And so it is a great time from that aspect. I only honestly can get a little bit stronger over the next 45-ish days before we hit the end of the year.
Yeah, I mean, I had a guy call me out of suburban Phoenix, and he says, I've got this, and I need to, kind of what you said, I need to move this thing and move this money before the end of the year. And I think we're seeing that, quite a bit. So good stuff, and hopefully everything, with whatever not to get too political, but the government shutdown ends soon and things move on to normal. And like I said, a lot of positive economic indicators. And again, and if you're listening to the show here, I mean, be careful about what you follow on YouTube or on television. And some of it's good, some of it's true, much of it is not. Are things in a perfect world right now? Maybe not necessarily, but there are many positive economic indicators that things are improving and better than they have been. And we look for a strong housing market, with that said, in 2026. All right, I'm going to finish here with our segment on I've been working with some different people in realtors and in business on their mindset and taking it a little bit different. I had someone that said they had a large real estate team, and they had a room full of people, Kendall and Brad. They brought in all these speakers, and they said it was unbelievable. They paid some people, several $1,000s to speak, several different people, and I called it the kind of the $75,000 wake up call because they brought these people in high dollar, and they spoke, and they blew them away. Had great leadership training, but they said it didn't stick. And I said, well, what do you mean? They said, well, 3 weeks later, all of our people and all of our real estate agents were back to doing the same thing. And was this a waste? What did I do wrong? So as I kind of analyzed this, I said, well, I think what you did was very inspirational. And what do you mean? I think everybody was excited. I think they were inspired. But inspiration wans and fades after a period of time. And it may fade. It's going to fade within 3 weeks. It may fade within a week. I said, well, what? I said, you need something that is inspirational and also transformational. Inspiration is gone. Week, 2 weeks, 3 weeks. Transformational will move you. Well, how do we get that? I said, well, that you have to train your leaders, and your leaders have to be there daily to hold those people accountable and see that they're executing. And I know both of you, Brad, you have several employees. How important is that? I mean, and I've broken this down. Like I said, there's inspirational, and then there's transformational. Requires not just training the employees, but training the leadership and holding those people accountable. How important, I call them, and I also have it broken down into daily and even 3-hour increments of targets, of hitting daily targets. We got weekly goals, we got daily goals, and within those goals, Brad, we have targets. How important do you feel like that ability and my target system within the goals. I feel like that's critical. In your business, is that something you kind of let people roll on their own? Do you have accountability, and how tight is that accountability?
No, I mean, I love it, Coach. I mean, you're speaking my language. To me, it's all about a couple things. One, it's a mindset, it's goal setting, and it's collaboration. I mean, you need to have yourself and your team all part of the bigger vision. That bigger vision is why. You can go listen to Simon Sinek's Why TED Talk. It's one of the most listened to TED Talks there is. And you talk about transformational. Why are we doing what we're doing? And then what are we doing to achieve that? Not only quarterly, yearly, weekly, daily, are we slowly getting there? And so, when you talk about a target, you can go all the way back to little things like people want to get in better shape. One push-up a day is better than zero. So you transform that to the business world and my world. One call with a client is better than zero calls. 2 calls is better than 1. What are these little targets that we're doing to help reach our overarching goal? And then how are we holding ourselves accountable? And then how are we holding the team accountable? And we do that. We strive for that. We have KPIs, key performance indicators, that we talk about within our organization, that we measure these things. And to me, that is how you know whether you're on the path for success. I mean, you take it into the real estate world, and you can speak more fluently than I can on it, but how many people are you reaching out to? How many listings are you having? How many showings are you having? How many marketing emails are you sending? All these little things that help drive success over and over and over again. Absolutely, man. I love this conversation. I could spend 3 hours talking about it, learning about it. And yeah, absolutely.
Well, and I'm going to bring Kendall in a second, but one thing I tell people, let's start with this. You have to be speaking to people every day that you've never spoken to before in your life. It's comfortable to call maybe an old client, and that's not a bad thing. It's comfortable to call another realtor. It's comfortable to call friends and people, and those things are not unimportant, but they are second to generating new business. And again, this is part of our Grant Cardone 10X coaching. I mean, Cardone's a love him and hate him guy, but he's got some unbelievably good sales material. And so I tailor that into my own coaching and own program. I mean, I'm not necessarily a clone, but I've got all that. And so we back it out, Brad, how much money would you like to make in a year? Or how many deals would you like to do in a year, whatever the case, okay? How are we going to do that? Okay, you want to make, $1 million a year. How much is that a month? Well, that's going to be this amount a month, okay? How much is that a week? In a week, how much is that? Okay? All right, now, let's say that you're going to work 6 days a week, taking 1 day off. How much of that we need to make a day? That actually comes down to about $3,400 a day. And, maybe your goal is to make $500,000 a year, okay? We want to set massive goals. You set a goal, and you look at it, and I say, hey, can you hit that goal? Oh, yeah, I'll easily hit that goal. Okay, then let's redo it. Then that's not, we want to take massive goals that take massive action. But what do you have to do to reach that? Well, okay, we're going to have targets. All right, well, between 6 a.m. and 9 a.m., what did you do? Hit your targets. And maybe you just got dressed. Maybe you exercised. Maybe whatever. That can be a part of it. What did you do? Okay, between 9 and 12, how'd you hit your targets? Now, between 12 and 3, how'd you hit your targets? Now, maybe we need to revamp our targets at 3 because we got from 3 to 6. We got one more run at them. And what did we do? How did we do that? Daily. That's the way that we'd like to break it down and achieve that. But, again, back to the other thing, you have to transform your mindset and your way of thinking. And I know, Brad, like I said, the leadership has got to do that as well. And you've got to train leadership to hold some of those people accountable, starting with holding ourselves accountable. If you're a leader and you're all over your people and you go strolling in at 11 a.m. every morning, that's probably not going to be a successful formula. Kendall, what are your thoughts about? I mean, you may have some different thoughts about this, but what do you think about the whole thing of accountability? Do you like to I know you like to give your people some freedoms. I mean, where are you at on this whole thing?
Yeah, I think the best leaders are going to hold everybody accountable. I would listen to Brad's TED Talk. If you roll that out, I'll listen to the 2-3 hour version. But for me, I want people to enjoy being at work, and I want people to be successful being at work. And sometimes those things don't equate to each other. So for me, what you're saying is the way to go about it. Break your big goal down into little tiny pieces. And when you go to one of these things that it gets you all very, super inspired, execute immediately, because you're right, that sort of thing kind of wanes as time goes on, and it's hard to get that feeling back. You got to take advantage, strike while the iron's hot, and put your system in place to where the little things you're doing every day are getting you toward your goal. Having business conversations, in my opinion, is the number one thing. Just make sure you're having as many business conversations as possible in any given day.
Yeah. And the final thought here before we push up against the hour and get out of time. There's a happy medium there between like Brad and I. I mean, I'm like super gung-ho, hey, boom, do this. Brad probably there. Kendall's probably a little more wants you to be happy. And there's some of that too. I coached with a guy one time, and I said every young guy that thought he wanted to be a college coach is really young needs to have an opportunity to go work with this guy, because he's going to hold. You talk about accountability, ridiculous. You're going to work, be there at 7 in the morning until 11 o'clock at night. He's going to curse you out and go off. I mean, we had a young guy in there one time, and we brought a guy for a visit. And he sat him down. He said, and I'd been gone on the road. I was the top assistant and recruiting coordinator. This is 30-something years ago. And I got back in. He said, okay, Brad, the young man's name was Brad. He said, do you have a room at the Holiday Inn? Yes, we do. Back then, the room's open to the outside. Is it poolside? Is it first floor? Is it this? Is the room decorated? Did the girls go out, the cheerleader, did they decorate the room? What's his favorite color? His favorite color's blue. What is this? What is that? What's his favorite food? What's his favorite team? What about this? And he went down a list of 30 things. And he finally said, did you get a king-size bed? There's a long pause. No, I didn't get a king. God hit the fist on the desk, the cursing, and he said, Coach, he's 5'11", 6 foot. Does he need a king size? And that made it worse. Okay, so the only thing there, you can take that accountability, maybe to the point of making everyone miserable. If a guy did 2 years under this guy and coached under him for 2 years, it seemed like 20, or it seemed like 10. I mean, everybody needs it because, I mean, Lord, it'll prepare you for a great career and kind of know what it's like and how some people do it. But, I mean, you can take it, probably become too militaristic in today's society and be too difficult. And so I think we want to take some of me and Brad and really be accountable, and to also take some of Kendall and like, hey, because if we got people leaving when you're dealing with adults and they're working and whatever, if they don't like their workplace and you're turning people over every 6 months, then you're constantly training new people, constantly have ins and outs, and there can be negatives to that. Final thoughts on that real quick, Brad. You know where I'm at? You're probably right there with me, but at the same time, we've got to keep people to some degree that want to come in there and stay there for a few years, to where we're not just turning people over every 6 months.
Yeah, 100%. I look at, I think if I were to outline my weakness as a leader, sometimes it is more the soft, fuzzy things when it comes to why they're at the office. So I try to, A, identify what my weakness is, and then B, try to really work on that and try to say, okay, let's make this an environment that you want to work in and for, and to what are things. And that kind of goes back to, why are you working here? And a lot of people say, well, it's for money, but dig a little bit deeper. Hey, I'm working here because I want to try to provide for my family so I can send my kid to school. So every time we talk about a goal, breaking it down as you broke it down, Coach, is all right, hey, when you make this sell, when you do this, this is another $500, $1,000, $100, whatever it is, that you can put in your piggy bank to help send your kid to college, or that you can buy your car, you can take that dream vacation. Instead of just saying it's $100 that you get in your pocket, it's $100 for X, and really driving that through, and then making it a fun environment. I mean, you're going to spend more time at your office than you're going to spend at your house. And so I think there is such a great thing to make work a fun place to be. It's not always going to be fun, but if you have that mentality that we want to make this a fun, exciting place to be, doing what we do, and we sell insurance, which is one of the boringest things in the world to sell, we understand that. But if we can have a fun atmosphere when we're doing it, hopefully we can attract and retain top talent.
Yep, absolutely. Kendall, 30 seconds, final thoughts.
Yeah, you got to find that happy medium, Coach. Like I said, my focus was have fun at work, in our busiest times. And there needed to probably, I could have erred more on the side of, being more militant. And you got, if you're the leader, you got to find the happy medium where people like being there, but they're also learning and they're being profitable for the company, profitable for themselves.
Absolutely. All right, guys, great job. I mean, we're pushed up against the hour again. Oklahoma City Thunder take on Portland Trailblazers tonight, our world champion Thunder. Thank you for being here. We're here on Wednesday nights at 6 p.m. Central Standard Time. Until next show, you stay safe and may God bless.